94 years old. One warning, and Wall Street is paying attention like it hasn't in years. Buffett issues a direct 2026 stock market warning amid a historic leadership transition at Berkshire Hathaway. This just happened, and most investors don't realize what it means yet. Here's what's really going on and what you should be thinking about right now. Because when the greatest capital allocator in history signals caution right before handing over the keys, that's not background noise. That is the signal. Buffett just delivered one of his most direct market warnings in recent memory, and the timing couldn't be more loaded. Greg Abel is stepping into a more central operating role at Berkshire Hathaway right now. That transition is live. And Buffett chose this exact moment to speak plainly about market valuations heading into 2026. Here's fact one. Berkshire's cash pile has ballooned to record levels. That's not an accident. That is Buffett's portfolio speaking louder than any press release. Fact two. Buffett has repeatedly flagged that equity valuations remain stretched by historical standards. Price-to-earnings multiples on the S&P 500 are sitting at levels that have historically preceded periods of significant underperformance. Fact 3. Buffett's track record on these calls is not theoretical. He warned before the dot-com collapse. He raised cash before the 2008 financial crisis. His silence is meaningful. His words are more meaningful. And right now, millions of retail investors are positioned heavily in equities, many carrying more risk exposure than they realize heading into the second half of 2026. But here's what nobody is saying about this yet. This isn't just a market warning. This may be a farewell framework. Buffett knows that once Abel takes full operational control, his direct communication cadence changes. So ask yourself, why would the most disciplined investor alive choose this moment, this transition, to issue a blunt warning? Because he wants it on the record. Because he wants you to hear it while his name still carries the weight of 6 decades of compounding. That's not a throwaway comment at a shareholder meeting. That's a legacy message. First consideration, audit your valuation exposure. If your portfolio is heavy in high multiple growth stocks, understand what a 20% multiple compression actually does to your net worth. Run that number. Second consideration, examine your liquidity. Buffett's cash position is a data point, not just a philosophy. What does your cash-to-equity ratio look like right now? Third consideration, stress test your downside, not the comfortable 10% pullback scenario. Model a 30% drawdown. Know your number before the market shows it to you. Buffett has been right before when everyone else was complacent. What do you think this means for your portfolio? Drop it below. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.